What's up, family? I'll be teaching you on how to identify order blocks correctly, how to trade them, and of course this will enable you to get those sniper entries that you see on smart money traders, also the tightest stop loss, take profit, huge take profits. So make sure that you watch this till the end. And of course, before we can go into the whole chart, I want to actually go into the whole definition thereof to just understand what is an order block. Why do we call it that? So an order block is an order from the institutional side. Of course, as we understand, smart money is observing how institutional traders take advantage of retail traders in order to create liquidity and to make money. So an order block is one of the concepts or one of the ways that we as smart money traders have identified in the market where we spot institutional traders or interbank market where they put their orders, hence the name order block. So this is an order block or a candlestick where they take their orders, okay, or where they take large orders after manipulating the market or taking liquidity. So it's very much important that you may understand the statement that I just said, because it will make much sense as we're getting on into the chart. So I will show you the candlestick, or rather the right candlesticks, the right situation, the right position where you need to find order blocks at. So we're gonna jump straight into the chart right now, so make sure you watch till the end. Okay, family, so I have two examples here, as you can see on the chart. Just before we can go on with this teaching, please note this works on any time frame. You can identify order blocks on any time frame whatsoever that you wish to trade, whether on the M1, M5, M15, all the time frames, even all the way to the monthly time frame. Now, we just want to lay the foundation first with this typical drawings that I have on my chart that kind of really represent the candlesticks. Of course, we will go into the real-time candlesticks just to solidify this concept to you, right? So I just want to start here just to make you understand, as we're understanding that an order block is where they get in on trades. And of course, I want to look for it in a sense that they get in on trades when they want to take liquidity of traders. For example, this would look like similarly to a downtrend. So basically you would have your break-off structure to validate that the market is in a downtrend, and then suddenly they give you a candlestick that lowers you in. Once they give you that candlestick that lowers you in, the market therefore breaks it with an engulfing candle. So that engulfing candle represents smart money being in the market or being active. So as I said in the beginning, that we are able to identify the pattern or the behavior of smart money by the way they get in onto the market, where suddenly we're in a downtrend and this last candle lowers traders in to sell even more on the market. But suddenly there's a candle that hits your stop loss so fast, so huge in terms of impact and range, that now you begin to question yourself, what happened? What happened? Smart money just got in, and all of those sellers are now being used as liquidity to now push the market up. So what happens? Let me just shift this one right here, okay? So what happens is that you want to basically take the candlestick. So I'm just going to highlight that. You want to take the candlestick that is engulfed, if we may use that word, that is engulfed. And the typical theory to this, right, the typical textbook theory to this idea, or to this concept rather, is that we expect the market, hence it has gotten with smart money, that it will be able to pull back to this area or mitigate this area. Then we may be looking to enter at the mitigation. Does that make sense, family? So you want it to go all the way up, come back to mitigate or touch that area or retest that area, then of course we can be going all the way up, and of course our entry may be somewhere right here, okay? We can even go as further as actually it's spiking within, but as a beginner, you want to put your buy limit or execute your trades manually at that level. Okay, does it make sense, guys? Please let me know if it does. Now, the very same example with a bearish example. Let me just get rid of all of this, right? With a bearish example, the market is in an uptrend. And of course, we can see the market now. Just do it again. We can see the market now navigating all the way up, and of course we have this candlestick that's lowering traders all the way to think we are buying. Then suddenly, so with a shock that blows other people's accounts, it begins to sell and hit a buy stop, or rather stop losses of buyers in the market. And of course, once it has done that, because the logic behind this is that if we've broken a higher high, or BOS in this case, that means we're going higher. And normally it will give you a candle technically, so a lot of traders will interpret that as buys, as we are good to still go into higher places because we've broken the previous high. But what the market does on the institutional side, they tank the market in order now to take that liquidity. And what happens is that we can take that as smart money trader and prepare to draw that as an order block. And of course, textbook theory says that we may wait, and it pulls back to that area, mitigates it, and of course we sell at the mitigation, and that is what we will see right here. Okay, so that's where we get in. And of course, when it comes to stop loss, or in terms of that, we may want to take stop losses or put our stop losses a little bit above. Okay, so we go deeper into this concept, a little bit above, all right, just slightly above the order block, and of course your entry will be right there. We'll talk later on about take profits, but you can set them as ideal as you want. But later on, when I talk about full smart money concept, lay out the next video. So make sure you watch this video and subscribe to this channel if you're new, because we're going to be dropping more content like this that will follow up. We have a playlist that starts you from A to Z of smart money concept. Okay, now that we're done laying out the foundation, we want to go into the real-time examples of this, okay? Okay, family, I have a typical bearish market, as you can see. I'm just going to zoom in for those who are watching on phones. I got you guys. And this is not the only way to spot order blocks, but from a beginner level, this is how I want to usher you in so that you should not get lost in all of this trying to be advanced traders. Trading, you approach it with simplicity, it gives you less headaches, right? And as you can see what I was talking about in terms of the foundation that I laid for you right there, you can see we have a break of structure right there. So we're going to zoom in. And most people will see this candle and start selling, right? Okay, so they will start selling the market so aggressively. This candle will validate. So let's play it back right here. Okay, I'm going to play it back for you to kind of really show you how it looks in real time. So people will put their entries, and this candle looks like it's validating everything, but suddenly so let's just say their stop losses are somewhere right here above that, or even above here. Then suddenly so right now the market just goes bullish. Look at that. So stops you out on those who have took those sells. Once they've stopped you out, we can see that smart money is in, and that is an order block that they have created to kind of really initiate to say that we are now starting a bullish market. They are now about to buy the market or make the market to buy. So in that case, you want to mark it, and it needs to be engulfed. Please, family, the best OBs are engulfed. Okay, of course there are others, but the best OBs, they're engulfed. You want to make sure. So you can take your rectangular, mark the full range of the candlestick. You want to make sure that you absolutely do that. Mark the full range of the candlestick. And of course, you will understand this more as you go into the other episodes. But as you can see, we will wait for the market to come back to these areas. And what we do, we just buy when the market gets there. Let's see if it will get there. It may take time again, please, family. So you must be really patient. Look at that. And of course, the market rallies all the way up. You can put your ideal take profit areas as you wish. Okay. can put your ideal take profit areas as you wish. I would advise that you take at the next structure. So if this was a lower low, take your profits right at the next structure, like something like this. Or if you don't want to be greedy, you can also take it at this structure below, which was in case when the market was creating this was the higher high. You can also take your profit at that previous higher high. Simple, right? The idea is that you want to make profits. You want to have the tightest entries as possible. And of course, this does not only work on NASDAQ. I just trade NASDAQ mostly. That's why I'm doing this example there, but it works on any pair. Now we're going to go to a bearish example and we're going to show you the example thereof. Okay, family. So as you can see, this is a typical pullback or uptrend. I'm just taking it for this example right here, as you can see. And again, you want the market to be breaking because it needs to break, it needs to induce traders in terms of retail technical rules, right? And as you can see, we have the break of structure. So many of us could have bought at this area. Personally, way back when I was trading structure and all of this, I could have possibly waited for this. Once I got this candlestick, many of us, I know very well we're going to be putting our buys here. Let's be honest. You see this kind of structure, it's been trending bullish. The next thing you see is the market breaking with this candlestick. Many of us, we're going to be buying right here. And what happens when many of us try to buy? Look at that, the market now tanks it. Imagine you have a perfect buy entry, or where you're supposed to sell, now you have the perfect buy entry in losses, of course. And of course, as you can see, this is quite perfect, as I laid the foundation to say an order block has to be engulfed and has to be taking that sort of obvious movement that a lot of retail traders expect. And of course, what do? You mark this, because now it shows us that smart money is in. Okay, you mark it all the way to the range. You can also take the wicks of those candles. Okay, sometimes I don't really mark it, but for you, mark it as a beginner, right? Because of my experience and the way my market buy feedback is built up, I know exactly what's going to happen. For you, you still need to build that up. Okay, once you mark it now, as I told you in terms of the test book area, is that we want the market to go all the way, pull back, then we sell. Okay, that's what we want it to do. Okay, so let's do exactly that. So I'm gonna play this, you will see what will happen. Okay, as you can see, the market got back into that order block. We got in fact, halfway in it. So, but let's say your entry was somewhere here and your stop loss was somewhere above here, or you waited. I personally wait for the market rather than putting my sell stops or anything like that. Okay, I wait so that I can get the best entries thereof. Okay, so but let's just assume that you have put your buy stop right here. It's still a very good range. Sell stop right above there. And of course, as the market continues, it sells all the way. I just want to, before I play it, we can also see another order block, even though it's not a very strong one, it's just reacting to this one. And we can definitely see that as we get to draw that. Okay, let's get to see if the market really came back into it. Well, it didn't come back into it, so it was just a mere reaction of that. But you can see once the market got back into that, sellers, smart money were in and the market rallied all the way. As I said, you may choose to take it at the last higher low. So you may choose to take your profit right here, or you may choose to take your profit wherever desirable as you have measured. I will show you ways to take profit on the markets. So make sure you subscribe to this channel, family, as this will help you to add up to the knowledge that you have already accumulated within this video. Please also make sure to watch till the end, because I do have rules for you that you must follow as you get another, or every time when you get a new strategy or something that you do not know. It's very much important that you follow the rules that I'm about to tell you right now. Okay, family, you've watched the video, and of course this is the end of the video. But before we can go off, you want to make sure that each and every time that I teach a new concept to you as a beginner trader or an intermediate trader, is that you give yourself time to practice what you have learned. So after you've watched this video, your homework right now to get much better is that you go or you watch the video next to a chart or something where you can practice along to identify. The key is learning how to identify, learning how the market reacts, so that by the time you want to apply this concept into the real markets, you have already built up your system psychologically that the market reacts this way. So make sure not to jump that process and practice, guys. Practice surely shall make perfection. So thank you so much, guys, for watching till right now. You want to also subscribe, share, like, so that many people can get this content coming their way. We want more independent traders from Prophetic Forex. Anyway, this is your brother in the kingdom of God, your brother in Christ, Emmanuel Destiny, or Emmanuel Mukhali, signing off.